Hello everyone. In this video, we will discuss deductions under section 36 and 37 pertaining to profits and gains of business or profession. Let us first discuss deductions under section 36. So under section 36, subsection 1, subsection 1, this deduction is available for insurance premium covering the risk of damage or destruction of stocks or stores. Now, the quantum of deduction is actual expenditure incurred and it is available to all types of assessees. Section 36, subsection 1, subsection 1A is again in relation to insurance premium covering the life of cattle owned by a member of cooperative society engaged in supplying milk to Federal Milk Cooperative Society. The amount of deduction is actual expenditure incurred and it is available to all assessees. Section 36, subsection 1, subsection 1B is in relation to medical insurance premium paid by any mode other than cash to ensure the employee's health under scheme framed by GIC of India and which is approved by the central government, or scheme framed by any other insurer and approved by IRDA. The quantum of deduction is actual expenditure incurred and it is available to all assessees. Section 36, subsection 1, subsection 2 is in relation to bonus or commission paid to employees, which would not have been payable as profit or dividend if it had not been paid as bonus or commission. Again, the quantum of deduction is actual expenditure incurred and it is available as deduction to all assessees. Then deduction under section 36, subsection 1, subsection 3 is in relation to interest on borrowed capital. So the quantum of deduction is interest paid in respect of capital borrowed for the purpose of the business or profession shall be allowed as deduction. However, if capital is borrowed for acquiring an asset, then interest for any period beginning from the date on which the capital was borrowed till the date on which the asset was first put to use shall not be allowed as deduction. Now this is again available to all types of assessees. Moving ahead to deduction under section 36, subsection 1, subsection 3A. This is in relation to discount on zero coupon bonds and the quantum of deduction is pro rata amount of discount on zero coupon bonds. Okay, and it is this deduction is available over the life of such bond and this deduction is only available to specified assessees. Then deduction under section 36 subsection 1 subsection 4 is in relation to employer's contribution to recognized provident fund and approved superannuation fund. The quantum of deduction is actual expenditure incurred and it is available to all assessees. Then section 36 subsection 1 subsection 4A, any sum paid by SSC employer by way of contribution towards a pension scheme as referred to in section 80 CCD on account of an employee. Now the amount of deduction is actual expenditure not exceeding 10% of the salary of the employee. So what does salary mean for this? Salary includes basic pay, dearness allowance to the extent it forms a part of retirement benefits, and then it also includes turnover based on commission. Now this is available to all SSCs who are employers. So deductions under section 36 subsection 1 subsection 5 is in relation to employer's contribution towards approved gratuity fund which is created exclusively for the benefit of employees under an irrevocable trust. Now what's the amount of deduction? Actual expenditure not exceeding 8.33% of salary of each employee, and again this deduction is available to all SSC employer. Next is deduction under section 36 subsection 1 subsection 5A. Now this is in relation to deposit of the employee's contributions in the respective provident fund or superannuation fund or any fund which is set up under Employee State Insurance Act 1948. Quantum of deduction is actual amount received if it is credited to the employee's account in relevant fund on or before the due date as specified under relevant act, and this again is available to all SSC employers. Then section 36 subsection 1 subsection 6 speaks about allowance in respect of animals which have died or become permanently useless. Okay. Now, the quantum of deduction is actual cost of acquisition of such animals. You have to deduct the realization on sale of carcasses of animals. So, in case if the dead body of the animal is sold and some amount is realized out of it, then that amount has to be deducted. So, you might think why the carcasses of animals can be, will be sold. It can be due because of the skin or meat, etc. Okay, and who is qualified for this deduction? All SSCs can claim deduction under this section. Next deduction is deduction under section 36, subsection 1, subsection 7, and it pertains to bad debts which have been written off as irrecoverable. The quantum of deduction is actual bad debts which have been written off from books of accounts. However, if the amount of debt or part thereof has been taken into account while computing the income of the SSC on the basis of income computation and disclosure standards notified under section 145, subsection 2 without recording the same in accounts, then such debt shall be allowed in the previous year in which such debt or part thereof becomes irrecoverable. Okay, it shall be deemed that such debt or part thereof has been written off as irrecoverable in the account. And this particular deduction is available to all SSCs. Spelling error over here. Moving ahead to deduction under section 36, subsection 1, subsection 7a. Now, this is pertaining to deductions for provisions for bad and doubtful debts, which is created by certain banks or financial institutions and non banking financial companies. Note that the deduction in respect of bad debts actually written off under section 36, 1, subsection 7 shall be limited to that amount of bad debts which exceeds the provision for bad and doubtful debts more than the created provisions. Okay. So, what is the quantum of deduction? Deductions for provision for bad and doubtful debt shall be limited to the following. In case of scheduled and non-scheduled banks, sum not exceeding aggregate of 8.5% of total income and 10% of aggregate average advances made by rural branches of such bank. Okay, before making any deductions under this provision and chapter 6A. Second, in case of financial institutions, it is up to 5% of the total income before any deductions under this provision are made and chapter 6A is made. Then, in case of foreign banks, the deduction available is up to 5% of total income before any deductions are made under this provision and deductions are made under section chapter 6A. And the last one is in case of non-banking financial company, then the deduction amount is up to 5% of the total income before any deduction under this provision in chapter 6A is made. Now, who are the ones who can claim this deduction? Any banks, public financial institutions, non-banking financial companies, state financial corporation and state industrial investment corporations can claim this deduction. The next deduction is deduction under section 36, subsection 1, subsection 8. Now, deduction under this provisions is allowed to following entities in respect of the amount which is transferred to special reserve account. So, which are those organizations? Financial corporation which is engaged in providing long-term finance for industrial or agricultural development or development of infrastructure facility in India. And B, public company registered in India with the main object of carrying on the business of providing long-term finance for construction or purchase of residential houses in India. The deduction shall be allowed to the extent of least of the following, lower of the following. Amounts transferred to special reserve account or 20% of profits derived from eligible business or 200% of paid up capital and general reserve on last day of previous year minus balance in special reserve account on the first day of the previous year. Least of the following will be taken into consideration as amount of deduction. Now, this particular deduction is available to specified financial corporations or public company. Coming to deduction under section 36(1) subsection 9, this is in relation to expenditure incurred by a company on promotion of family planning amongst employees. The quantum of deduction is entire revenue expenditures allowed as deduction. Capital expenditure shall be allowed as deduction in 5 equal installments in 5 years. And the SSC who can claim the deduction under section 36, subsection 1, subsection 9 is the company. Then moving to deduction under section 36, subsection 1, subsection 12. Now, this is in relation to any expenditure incurred by a notified corporation or body corporate constituted or established by a central, state, or provincial act for the objects and purposes authorized by the respective act. The amount that is available as deduction is actual expenditure, not being in the nature of capital expenditure. And this is available to all notified corporations. Then moving ahead to the next deduction, that is deduction under section 36 subsection 1 subsection 14. Now this speaks about contribution to credit guarantee trust fund for micro and small industries. Actual expenditure incurred is the quantum of deduction and it is available to public financial institutions. Then section 36 subsection 1 subsection 15 is in relation to securities transaction tax paid. The quantum of deduction is actual expenditure incurred if the corresponding income is included as income under the head profits and gains of business or profession. This deduction is available to all assessees. Then deduction under section 36 subsection 1 subsection 16, amount equal to commodities transaction tax paid by an assessee in respect of taxable commodities transactions which are entered into in the course of his business during the previous year is allowed as deduction. The quantum of deduction is actual expenditure incurred if corresponding income is included as income under the head profits and gains of business or profession, and this deduction is available to all types of assessees. Then deduction under section 36 subsection 1 subsection 17 is in relation to amount of expenditure incurred by a cooperative society which is engaged in the business of manufacture of sugar for purchase of sugar cane. Now, the quantum of deduction available is least of the following: actual purchase price of the sugar cane or price of sugar cane fixed or approved by the government, whichever is less. Now, this deduction is available to cooperative society which are engaged in the business of manufacture of sugar. The next section is in relation to uh, mark to market loss or other unexpected loss as computed in accordance with the notified ICDS. Actual losses incurred will be the quantum of deduction and it is applicable to all assessees. Moving to section 37 subsection 1, any other expenditure which is not being personal or capital expenditure and expenditure mentioned in sections 30 to 36 which is laid out wholly and exclusively for the purpose of business or profession. So any other expenditure. Now, this expenditure, whatever actual expenditure is incurred, will be available as deduction and it is available to all assessees. Then, moving to deduction under section 37, subsection 2B. Now, this is about expenditure on advertisement in any souvenir, brochure, etc., which is published by a political party, shall not be allowed as deduction. This deduction is not allowed and it is applicable to all assessees. So any expenditure which is spent in the form of advertisement in any souvenir or brochure which is published by a political party, this particular deduction will not be available to any of the assessees. That's all in this video, students. Hope you all have taken a note of all these provisions because when we are solving the problem, all these provisions are uh, absolutely required. Okay. Yeah. See you all in the next video. Thank you.